right, so this was a trade I took today. This was a textbook by model from external range liquidity to internal range liquidity. So I'm saying that because I was planning to take it to external range, but since today is a Thursday, and according to the rule book, you all know that a day before NFP is a no trade day. There was, if I'm to go by the rules, there was no ample trade for me today. But I happened to snatch a setup, and it was so clean for me to just let it sleep, and I happened to take it. It didn't reach take profit because I was so conservative with my stop loss. I tried to squeeze every ounce of profit I could get from this trade. Got stopped out at the trailing stop. My stop was trailed to profit, then I got stopped out. I'm going to speed this up. You can go over the trade in detail. So this is a 3-minute time frame. I was taking a buy of, so this is my other account. I did get a good feel on this because I told you I'm managing 3 accounts at once, so I got a good feel on another account where I entered at around this inversion fair value gap. We dropped to -2 standard deviations of this protraction leg here before they move down. So if you can go back to that move that happened at 9:30, so that leg before it, if you extend that further into price, we had the -2 standard deviations there. We had a sweep of minor sell side, as you can see, and a 3-minute inversion within the macro 950 to 1010. So if you are dealing with macros, I want to give you some secret sauce today. If you are dealing with macros, you want your entries to be off of high time frame PDRs, so you're not going to be looking at the lower time frame PDRs. I want you to start looking for your fair value gaps, order blocks within the 3-minute time window. That eliminates a lot of noise. But for other trading sessions or trading hours, it's fine. You can consider the 1-minute PDRs, but for the macros specifically, I want you to majorly put your focus onto the 3-minute PDRs. So this trade is moving so slow. Okay, let me play this. All right, so that's my buy side target. It was a take profit for the buy side that was formed at the daily open. I believe that this market is going to continue higher according to my analysis, but I will further make the adjustments to that. I don't want to stick my brain to a certain bias. I want to read price action. So I was looking at that, this current black candle, this one here, to form an order block. As you can see, I'm so conservative with my stop loss, so I already reduced risk just in case we have a candle poke down if we are in an accumulation. But this was a breakout. We had a drop lower, minor sell side. Let me take my cursor out. You see, I'm moving my stop, trailing stop, to break even. If we get a closure above that, we got that closure, stops moved. You're going to see me do that to all my other accounts soon. Yeah, so then I'm moving my stop loss to need to be quick. That's the other bad feel I got at this account. So I got a bad feel on the other account, and I got a bad feel on this account. So yeah, that is it, and it was fine. So I was still working in the scopes of my trade, just that I was risking more. I have a daily change in set of delivery marked. This, I don't know what type of blue is it, blue, green, and stuff like that. This line is a daily CISD, I want the market to close above it, so I wanted the market to show respect to that, closing above it, then moving from it, going higher, because we had finally inversed that first presentation fair value gap at 9:30, so I was floating up around 300 and something dollars. So above there, I'm having the 12 a.m. 12:30 opening range. I'm having the daily fair value gap right there. Mark that blue box. So that daily fair value gap happened to push price lower. That's where I knew I had to conserve everything that I had gotten from the trade and moved my stop loss to break even. You're going to see later in the video. So I wanted to see this order block where my stop loss is at, because stop is already at break even, it's already in profit. I wanted to see that order block respect. I wasn't willing to take back stops to losses, so I was just holding at that right there. Alright, so in bullish conditions you want to see the market. So I thought of moving stops to mean threshold, but I wasn't securing any profit, and I was like, no, I'm not going to move my stop loss from there. Only I'm going to move it above price. I'm not moving it back lower, because I wanted that fair value gap, the one I marked where my stop loss is at, to remain unfilled, to stay as a breakaway gap, and the one this way down to also do the same. So the market rallied higher, and I'm like moving stop loss to break even the moment that candle closes above that black candle currently. So that's not what the market was saying. So I was like telling, I want this to be a breakaway gap, I want this to stay open, so I didn't want the market to come back below that. So I was fine with where my stop loss was. Right, the market was buying. We had a lot of rejection blocks on this side, as you can see. If I'm to look for a bearish rejection block, it has to be a bearish candle. So these are all bearish candles with rejection blocks, you see. So I expect the market to reverse at any moment. Could have gotten a Drake candle from this and this and this lower. So all was possible, and you can see if you follow the market right now, the market sold off. The market did not respect, it just consolidated. You're going to see where I went out from. Alright, so I'm watching price right now. Price wasn't moving real well for me, so I was like, let me move my stops real quick. I get the closure I wanted to secure, because the market was rejecting now that rejection block. So I was like, let me move my stop losses to break even, and that's where I was like, I might get stopped out, but didn't get stopped out. This account had a bad fill, and that was really disturbing. It was really disturbing, so I had to move stop loss to cover any cost. I was like, let it stay at where it is staying, and I'm fine with that. Okay, that candle didn't take me out, respected that 3-minute breakup block right there. I'm having 10 a.m. hour open below price. The market opened up at 10 a.m. then dropped lower, and that was one of the confluences for this trade, as you can see right there. So I anticipated that since this candle made a lower low with that candle, I'm going to move price, I'm going to move stops to break even further. So I was looking at where I'm going to move my stops again. I'm closely looking at that daily fair value gap. This is like price action 101. This is the 15-minute time frame. Closely looking at that daily fair value gap. We have a large 15-minute FVG, so this can be a continuation mode of lower for the market. So I was like trying to squeeze out everything, going back to the 1 minute, trying to see what we have here. Where can I move my stop loss to? Stops moved to the low of that, because that had to become an order block. If I was to get stopped out, that had to become an order block. Alright, so I got a chance to move, so I wanted the market to close above that, give me body closures. So I do not just show my stop loss out of the blue, I wait for confluences to do that. So that had to become an order block right there. So I wanted the market to close back above that order block, then my stops were going to move to the most recent low. You're going to see that this is trailing stop loss 101. So this is just like showcasing pure stop loss management and placement. So can I told I need a closure above that. I'm not afraid at the moment for any drip candle that forms because I was fine. Trying to squeeze a little bit more out of the market, then that candle did wonders for me. It went and closed above that, so stops had to move just like that. Like, let me move stop loss. I was like trailing to close after on the closure, so that's where I was like, this is enough confirmation. I didn't expect this candle to be manipulating back lower, and I was like, okay, let me move this on all my accounts, securing very good money. So I'm trying to get out of drawdown. Almost got out of drawdown today, but didn't, closed below. So I was like looking at that. And I was like, this is an order block, stop loss is below mean threshold. We tested the breaker, so this is the current order block. The market has to respect this there. I don't think it gave me a chance to trail more. I don't think, because market just went off and took me out at break even. So that is it. That's how you trail your stop loss. Alright, stay disciplined guys, not to get hurt. Thank you. We'll meet again next time.